Welcome to Charts Today. My name is David Linton, and today's edition for Monday, the 19th of December, comes to you from Petra in Jordan. And my heart goes out to people who were killed yesterday in the terrorist attack in Karak. I was actually there just before it happened, so I'm feeling rather lucky. Anyway, so we're looking at markets. We start with the dollar index. We've got a new upside target off last week's move to 105, which is about 2.6% upside. We are seeing a little bit of a fallback in the dollar at the moment, but still looking very strong long term. And if we take a look at the euro, we see the big thing last week was that we activated this downside target here to 89 cents. So that would be a euro cost 89 cents US to buy. And there's a bigger one here to 60 cents. If we move another 1% lower and close that at that level, we activate that. We also see the activation on this chart to a target of 93, and we've got a new downside target on the short-term target to 99. So we are seeing just lots of downside potential in the euro. Does look like it will have a bad year next year. Looking at Japanese yen, that has pulled back a little bit overnight, and we are seeing just a little bit of a downside target here that's not showing up in the other charts. So interesting, just a 0.5% downside. So we are seeing a little bit of a sell-off, but still bullish on all three time frames. And a quick look at sterling. We see on the sterling chart it's still bearish. We do have this new downside target to 117.93 based on last week's move, but we'd need to move to a new low below the sort of 123.90 level to activate that. So if we see new lows in sterling this week, that does point to a level below the 120 mark. So dollar strength, sterling weakness, still very much the name of the game. Taking a look at the US stock market, we did pull back a little bit on Friday, so only just a little bit, only a few percent. We do have a new upside target of 8% upside. If we move to new highs, we activate that. Long-term chart still looking spectacular. And the NASDAQ did hold on to the 4900 level, did pull back a little bit, but the key thing is we've held this level. That was the breakout. We're holding that at the moment. We do have a little bit of a downside target, but at the moment still bullish on all three time horizons. Taking a look at the FTSE also closed a bit higher on the week, closed above the 7,000 level again. Really psychologically an important level for the FTSE. And so good to be back above the 7,000 level. A shortage of new upside targets here. We do have one to 7,179. That's about 2.4% upside given a while ago, but no new thrust targets. So it's still just pretty flat, the FTSE, and we see that showing up in the weekly chart. We've just really got to break sort of 7,172 to really feel confident that it's going to run. And we take a look at the DAX. The DAX actually closed up again slightly on Friday, holding on to its gains, looking pretty strong all round as well. The Nikkei overnight just down very, very slightly in Asia, but again, Nikkei has had an amazing run and it is holding on to that gain. And so that is quite good. And we do have an upside target of 6% to play for there. Hang Seng is still looking pretty bearish on all three time frames. New downside target last week to 2100, 3.5% downside. It's the weakest looking market at the moment. China really is looking pretty grim compared to the others. Australia had a good run overnight, up just over 2/3 of 1%, and we see that's bullish on all three time frames with lots of short-term targets. So looks like the Aussie market having a good run into the new year. Brent also looking strong, back into bullish territory on the short-term chart. Upside targets to 56.20. 58.10. So we are seeing new upside targets heading into the summer driving season, into the new year, looking pretty good all round. Gold has had a terrible time the last couple of weeks, but it is just recovering a little bit. Still not enough to be through the cloud on the short-term chart. Will we find support on the long-term chart? Gold tends to have a good start to the year, so maybe we'll just see gold coming off the bottom soon. Taking a look at the US Treasury yield, it's at 2.59%, still bullish. We're in a bit of a flat zone here. Quite a lot of volatility with the Fed announcement last week giving us targets in both directions, but we are seeing an upside target here of 4.44%. So it is really showing signs of motoring now. US interest rates, the market expecting them to go up even higher. Apple held on to its gains on Friday, but Facebook just couldn't hold that 120 level and is back just below 120 at 119.87. But the charts still look pretty good long term. NASDAQ just not really firing as fast as the major indices like the Dow and the S&P. That's it for today. Until tomorrow, happy charting. See you then.